picture there, this is the only outfit that I own. But I do what I can. Web3, you have good moments, you have bad moments, right? It's just how it goes. Anyway, we've got a session here which I think is really, really crucial and very important. At the same time, you look at this title, it's sort of word salad, isn't it? There's a lot of long words in there. Doesn't sound all that dynamic. And at the same time, this actually hits at the heart of some of the biggest issues that we need to talk about, right, in Web3 and DeFi. So let's just look at this whole conversation about decentralized finance, reaching adoption and maturity, regulatory improvements. We've got a great panel here, all with very different perspectives. I'd love to know from your guys' perspective what this topic means to you. And Mauricio, if I can start with you.
Okay. If you told me like 10 years ago that we'll be excited about progression, regulation in crypto, people would be like, are you out of your mind? But I think as an industry, we've come a long way in determining what good looks like, whether it's less regulation, more regulation, better or more appropriate regulation. And as a builder and as someone who's been in the industry for a good part of 11 years, seeing the discussion of degree of maturity, we're gonna try and conclude if this is adoption, but it certainly is maturity in terms of conversations.
For sure. And Temujin.
Yeah, we're crypto natives, and this is kind of the perspective where we started at, very much decentralization first and always, but as Mauricio said, the industry starts to mature, and at first it seems scary. Okay, you have these, TradFi, Web 2 institutions coming in, but then you realize, okay, this is kind of what mainstream adoption means. So this is why, at least from a product developer's perspective, it is something very important to consider. In particular, my projects focus very much on blockchain interoperability, bridges. These have often kind of gotten into trouble vis-a-vis hacks and different types of security incidents, so compliance, very, very much front of mind for us.
For sure, and Rupert, you've got a very different perspective coming from the insurance world, right?
Yeah, we're a big, large risk and insurance advisory firm globally. Where we're looking at this is the risk angle. So we've got lots of digital asset native companies who are quite small, and then the largest traditional financial companies in the world coming to us asking about how they should view risk on-chain and what the key considerations are.
Great stuff. So, Mauricio, you framed this really nicely with your answer. The regulatory situation for DeFi is in a place where I don't think we thought it would be 2 or 3 years back. It's not so long since the Wild West of Web3, is it? But now we're seeing institutional players get in. You've got Aon in this panel, for instance. Not necessarily you would expect a large insurer on a panel at one of these events 2 or 3 years back. So where would we say the regulatory landscape's at now? Would you go as far as to describe it as progressive, or are we still very much in like the reactive phase?
I think if you look in the last, from the DeFi summer of 2020, 21, you would think that they're not taking notice because it's none of their business, but all of a sudden it kind of is, because you said, well, institutions are coming and all that. I think what we're seeing in the good tension about it is this has become geopolitical turf kind of discussions, where you have countries that are more progressive in the sense that they are deregulating things, and some are more like pulling into, oh, I won't really regulate because I want to do this. And there are countries which I think are doing great work, which is let's bring the industry together and let's co-create things that are more adapted to this new paradigm of decentralization. Because remember, most of the financial regulators in the world are called central banks, which is kind of play to what we're talking about here, which is they have to face a different paradigm, how these not only applications are built, but also how these businesses are run. Imagine having to deal with a decentralized autonomous organization. Who do you call? All of these things are different, and in different countries with different regulatory cultures will face these things differently. I don't want to single out oh, this country is doing right and that country is doing wrong. I don't think we're not even there yet, but I think the countries that are doing open conversation with the industry have a slightly better chance of coming as, in this kind of regulatory geopolitical turf, in a better situation to empower builders. We just saw a panel on acceleration. It's great that the private sector is investing and pushing, but if there's no regulatory climate, then it's just short-lived effort, and then they'll move somewhere else where, greener pastures, more clarity, better support. So I think this is, in that sense, there's there's no better or worse country. The countries that are doing more with the industry, I think, will come up at the top.
Yeah, I mean, we'll dig into that a bit, but I know what you mean. It's difficult to compare every single country on its merits and the things that it doesn't do so well. But what you touch upon there is something interesting, which is regulators going out of their way to actually actively engage rather than considering their job as being enforcement and stopping things when they go wrong. Like, is that marrying up to your experience as well, guys?
Yeah, very much so. I mean, we've all seen the news clippings. That was very much, especially in the US, kind of the approach. We'd be operating, we wouldn't have any type of guidelines, any type of blueprint, and then you'd maybe step out of line and you get slapped. Yeah. Now regulators, I think they're being more proactive, certainly, but the question is why. I think on the one hand, the value of DeFi, I'm not talking about from like a philosophical point of view, but just the pure dollars that are available there, this has caught the attention of TradFi. There's value there that needs to be extracted. They're not going to come in until there are clear guidelines in place, so then regulators kick it into gear. Second of all, our industry has, at least in the last several years, really put a lot of effort into try to educate regulators to get them to understand the underlying technology about why you can't just regulate the way it had been regulated previously, and major inroads there. We work a lot with the Linux Foundation, also the Enterprise Ethereum Alliance. This is kind of an ongoing conversation, a daily conversation with regulators all around the world to just let them first understand, okay, what makes this technology special, why is there value here, and then hopefully we can see, and we are seeing it, clearer and clearer regulation.
And Temujin, picking up on one of your points, big institutions don't necessarily need regulated vehicles to go into. What they need to understand is what is regulated and what is not regulated. And a big shift we've seen in some of the recent regulations in Singapore and Dubai in particular, but also Mika touched upon it too, is the real want of the regulator to differentiate what is true proper DeFi, i.e. non-upgradable smart contracts with no human interaction, no privileged access, as opposed to other vehicles where potentially you don't quite have that decentralization. And what we're really seeing is that if you are truly decentralized, you can sort of sit outside of this regulatory frameworks which are putting in place. But if you're providing advice or you're allocating assets on chain and you've got some kind of admin functionality, you should fall within the regulation. So the same for the reasons that if we put some funds into a DeFi protocol and someone runs away with it, we want them to be held accountable.
Yeah.
Funny to kind of explore that as well, because we lived through a period of the regulation by enforcement, which is whatever rules exist will apply, will enforce. If you do something that is not exactly within that, we'll slap you. And there's other spaces where it's more, the concept of regulation is same regulatory risk, same regulatory outcome, right? Which is an easier way for innovators to kind of see the regulatory landscape and play with that. But the fact there is these things are not, or have not always been clearly spelled out. When you have external entrants on the industry that are not necessarily builders of DeFi, but potential large users, their perspective is from a risk-based approach. Yep. And if there is no clarity, then there is no clarity on what risks you are entering or marrying with, and therefore you can't control, because risks will be there. It's what and how you can control and manage and mitigate, maybe offset, is the secret for maybe unlock that type of adoption. So to that extent, I kind of resonate with that, because that kind of speaks to my previous point, is whoever gets that clarity faster will probably create a better environment, not only for builders, which is, two of us are, but for our users who are willing to break into this market that are now more comfortable with the knowledge of the risks they're encountering.
Yeah. And just to be clear, I don't think we want to paint this as like everything's good now. There's still a lot of work to be done.
No.
Very much in transition. I think with regulations, we often in our mental models also think about it like country by country. Correct. In a way. But even within a country, you're getting a lot of conflicting information still. I mentioned before we're very much focused on interoperability. We've been paying real close attention to what's going on with Tornado Cash. Probably anyone who's into privacy also looking at that. Yeah. But even in the past 6 months, you get Supreme Court in the US on one hand saying, okay, the smart contracts themselves, they can't be put on the OFAC list. It's signaling to everyone, okay, maybe privacy is being accepted again. And then a few months later, the actual developer gets some sort of judgment against him came down. I forget the exact, the specifics. But we're still kind of getting conflicting information. So just want to clarify that. We're not saying everything's good.
Yeah, well, actually, one thing you said earlier, which I thought was interesting, was it's still the situation that you're educating regulators on how they should approach this space. And if that's the case, how can we actually, at this moment, expect fully clear, legislation and rules and frameworks, right?
Yeah, exactly.
I think there are industry efforts. If I'm not mistaken, the Cambridge Center for Alternative Finance has been for, I think, more than 5 years. They have been educating regulators. They have summits. And I think we'll likely see a correlation of countries that have evolved in the discussion are the ones who took part on that type of forum. So that's kind of one kind of highlight in the industry. But there's all sorts of, we had a panel earlier on creators, right? What's the reality of creators in Web3? I see that as a fundamental part of how good information gets communicated broadly across. And if you're a regulator and you're curious, you probably will be tapping into various resources, not only the formal ones, not only the ones that have been put together by large players in the industry, because the nuance is everywhere. So if you're a smart regulator, you're trying to get your head around all of this, it's not a single source. So you have to do your own research. I know it's a cliche, but it's also how we go from inertia to something that is moving forward and progressive and converging eventually with where the state of the industry should be.
Yeah, absolutely. Just one last thing to cover this part off. Do you think we do have anywhere the right regulatory frameworks for sustainable DeFi growth right now? I mean, you can look at things like MiCA, you could look at the Genius Act, you could look at the UK's discussion about eventually having something in place, Singapore as well. Do you think we currently have the right framework anywhere for sustainable DeFi growth?
So I think the general consensus is that Dubai and Singapore are far ahead. I think they've still got a long way to go, and obviously it's an active discussion. But both are regulating on activity, so they're trying to look at what the entity's actually doing, what's their involvement, and how does that compare with the traditional entity, and then applying regulation that way, which seems like the sensible way forward. I think the next step will be looking at how someone who's managing assets on-chain doesn't necessarily have the same responsibilities as someone managing the assets off-chain, because they are very different vehicles in terms of managing liquidity and the control that you have. So I think we'll eventually get to a stage where regulation is potentially lighter in certain areas for DeFi protocols, but at the moment, the leaders are really doing it on activity-based and then aligning that with existing regulation.
Yeah, I see you nodding there, Temujin.
Yeah, I would echo that. There's not a single framework that you'd point to and say they've got it right, but this shift to kind of away from regulating entities in a traditional sense and more so regulating activities, principles, risks. I think this is a much better fit for something like DeFi, particularly when we consider that DeFi itself is not a fixed thing. It's in flux. It's always changing. So this type of shift to this type of principle-based enforcement or regulation, I think this is very positive.
Brilliant. Let's move this on to yield quickly, because this part of this conversation is about reliable interest, and we know that many DeFi protocols were trying to grow a while back with promises of huge returns for having your money locked up, staking, so on. Now we're seeing more and more people say that you can get reliable interest. Is that a sustainable situation?
What's the saying we use? It's if you don't know where the yield's coming from, you're the yield, right? That's the ongoing joke in DeFi. But I think, as with any other financial product, in that regard, they are very similar. Knowing the life cycle of what the economics are for whatever asset is paramount. And that's where I think regulators have a larger role to play, which is educating on financial risk in general. Like if you go to the average population and pick anyone in the street and ask if they know how, what the monetary policies for the fiat that they're holding is, or how much they pay for their credit card, it's not a lot of people. And if you go to developing countries, it's even worse. So DeFi adds another level of sophistication, but there's an upside to that as well, which is things are on-chain, protocols are open source, you can audit a bunch of stuff. So just to kind of pick on the earlier, the previous discussion, there is a role for the regulators to play on-chain as well. Yeah. With the data, never had better data, timely data to monitor the markets. right? So, and which is one of my hopes is that we don't use the nature of the infrastructure that was born out of the 2008 global financial crisis to create another one, but that's a separate story. But to your point, I think there is a role for that, and if the economics seem too good, because they're unsustainable yields for whatever reason, then there's something on chain in public repos that the regulators need to learn how to use to prevent any major crashes, and then bring builders and the entities to whatever regime is necessary. That is on the consumer protection front. When it comes to institutions, they have the level of sophistication, and they have to enter the market, and then make sure that, again, back to the risk conversation, is this enough of a return on the risk that I'm willing to take, but now I know what the risks are. So I think there's a balance there, and there's a role for the regulators to play there as well.
Definitely. And you touch upon, if you see a return that looks too good to be true, that's suspicious. But I think there's more to it than just looking at a headline number, right? So in this day and age, when you're looking for something that has a sustainable interest, what are the kind of factors you're looking for? And perhaps what are the things that might give you an indication that something is a bit amiss, something's wrong?
I think you need to be able to always answer the question is, and I feel a bit ashamed of how often I have to say this to my team, but where's the money coming from? Regardless of what the actual number on that yield is, you better understand and be able to answer that question, at least for yourself. If you see that number, if it looks too good to be true, it is. DeFi is not magic. It's very cool, but it's not magic. And so most of these DeFi protocols, that are boosting that yield to chase growth, that's obviously not sustainable. There might be a few exceptions here and there. Some of these decentralized lending platforms have a very kind of obvious way of understanding where the yield's coming from, and if there's enough demand for a particular asset, sure. But I think the point is to really just understand where's the money coming from. And it's not only for DeFi, in CeFi it's the same as well. If it's Celsius or if it's Binance Flexi Yield, it's all the same thing. Why is this one 26% today and 5% tomorrow? If you don't understand what's happening in the background, I would say just stay away. If you understand, okay, I'm staking in an Ethereum node and I'm getting 3 to 4% and I'm feeling happy today, yeah, that's probably sustainable. Just understand where is it coming from, and that'll kind of give you a blueprint of what to follow.
Great stuff. And let's get into the big question here. I think we're all agreed that we're in a much better position with regulation than we were a few years ago. Institutional involvement is bringing money into the space. The market cap of crypto as a whole is shooting through has gone through the roof in the last few years too. But is this adoption, and what does real adoption of DeFi actually look like?
So I think, yes, it is. We've seen a massive increase in terms of the use cases that we have and the sophistication of the participants. You've got people like Temujin offering an alternative to the way Ronin Bridge was set up. Cross-chain protocols are just changing, evolving, and everyone can be a bit more confident with who they're dealing with. I think the principles of DeFi are obviously to take out decentralized institutions to begin with, but really the core of it is allowing two entities, whether that be a person or a massive institution, to engage with each other without trusting themselves. And big traditional financial institutions will always play a part in our ecosystem, and having them on chain and being able to interact with them will only be a good thing for the broader crypto community and help validate the space. So I think large institutions now publicly saying that they're playing around with public blockchains is a massive, massive rubber stamp of approval.
Yeah, I think it definitely is the starts of adoption. Having these institutions, these more mature, more professional players enter, they're coming because they see value there, but they're also providing value and increasing the value of DeFi as a whole. When we do get to a point where I can confidently say that mainstream adoption has arrived, that we're not there yet. I think as long as we continue to say DeFi and to view it as an alternative or a separate system to TradFi, it's not here yet. The best parts of DeFi are going to get just absorbed into the financial system, and then the world will move on. So in a sense, despite having kind of more professional actors and institutions now experimenting and playing with DeFi, it is also a bit of an existential threat to DeFi because these are all centralized actors. And part of this is our own doing. DeFi is still, the things you can do with DeFi, it's incredible, but it's not a totally mature stack. There's not really a single DeFi application out there that from top to bottom is 100% decentralized. The deeper you go, you can see little parts of the stack here and there that are still centralized, and this is true for just about every single DeFi application out there. And despite this, we've been doing really cool stuff, creating real value, bringing in new types of people to the system, and basically institutions, they got tired of waiting. They weren't going to wait forever as we try to continue to tinker on the details, and now they're here. The train's moving. We're doing our best right now that we don't lose the decentralized aspect of DeFi. But yes, adoption's starting, but hopefully we don't lose the D in DeFi.
Let me try and tackle this with piggyback on another question. Adoption in what direction, right? Because if I recall, when I first read the Bitcoin white paper almost 12 years ago, there's the whole vibes of decentralization, disintermediation, self-sovereignty. And when we talk about institutional DeFi, we're talking about intermediaries joining the DeFi infrastructure. And could that be considered adoption in the layer that we're bringing more TVL, more investment, more regulatory clarity? I think it absolutely can be in that direction. But if we roll back to the original ethos of the industry, where we are giving power back to individuals, pushing the values to the edges, creating other different network effects, I think we're in the stage of transition where there is a rewiring of finance to become from DeFi to just Fi. And I love the DeFi mullet meme. I think it's spectacular. The fintech in the front, DeFi in the back. I think that's what, in the period where we're living, this is what's happening. But if we lose sight of that original flame that started the industry, where self-sovereignty and decentralization and disintermediation are part of the new wiring of the Internet of Value, we just need to be aware that to not lose that. I think it's important that we accept the new players, and I think there's space for both. Don't get me wrong. If you want to be your own bank, there will be a reality in which you will be your own bank. But being your own bank bears the risks of being a bank regardless, so it's not going to be for everyone. So there will be this gradient of very much decentralized self-sovereign individuals or entities, and then it will be a longer tail of people that are dependent on the institutions and everybody else that has rewired the financial system. So I think it's not a unidirectional answer to this question. Depending on where you slice the ethos of crypto, you're going to fall yourself in different degrees of adoption, which I hope we don't lose any, and we create the optionality for everyone who wants to take on being their own bank and those who just want to participate.
Yeah, it seems like it's a battle to kind of retain that degen spirit, and at the same time, it's undeniable that DeFi has added genuine utility to traditional financial services. I mean, to speak from my own perspective, it's crazy to see the conversations on stablecoins dominating mainstream fintech events. And a few years ago, that would have been almost laughable to some of those major players in that space. So I do think we're clearly moving in a positive direction. But is it the same as what we were starting? What was the intention in the start? I don't know.
Yeah, and I think it's worth adding that we're talking about the regulation to enable DeFi adoption, to kind of create the opportunities for these applications to exist. Let's not lose sight that this is all built by builders, and these builders also need to be welcomed in where this will thrive. So let's not forget that there are geniuses. I'm not going to talk about AI, but it is a privilege to work in Web3 with the degree of genius that we have spread around every vertical in the industry. These people need the space and the opportunity to thrive, and then we'll get to push this innovation further for everybody else to benefit. And I think if we lose sight of that, then we're going to lose sight of all the mission that is to decentralize finance as a whole.
Mm-hmm. And I'm going to do some future looking to finish this conversation. Let's assume that regulation moves in the right direction and gives us the clarity that's needed and actually supports DeFi. What do we think the next frontier is? Is it something like the tokenization of real-world assets? Is it on-chain credit? Is it even decentralized identity or something like that? What do we think the next big thing is?
Who wants to go first?
Mauricio taking a deep inhale.
I I think one of the things, and I'm not just saying this because I'm building Midnight as a decentralized, programmable, privacy-preserving blockchain, but privacy is important. Like we gave away a lot of data that is now feeding all the AIs that can replicate your faces in very questionable videos. And we got used to this, right? And I think it's especially in DeFi where the most important maybe decisions we make is related to money, they can't be all public. Even for the institutions that we're talking about, they have a private side, they have a public side. If we don't get the control over what we want to disclose to the world quickly under control for us, we'll continue to be exploited by these increasingly more incredible AI devices that will ultimately end up playing against us because we just gave all our data, whether it's financial or personal. And I think it's time for the industry to kind of realize that this is a blind spot and address this front and center, because there are regulations for privacy. They are now all great, but they also need to come into play when it comes to on-chain finance or DeFi or stablecoins or tokenization, because otherwise, if everything is public, then every data is for free, and then everything gets to get exploited, and I think we know where that leads us.
Yeah, and you can see public opposition to kind of encroachments on privacy as well in the response to CBDCs in various parts of the world. Also, even if you look at the UK's Digital ID Act, that petition against it now has almost 3 million signatures. So clearly people do care about privacy. So it's not just a necessity, there's also appetite for it. How about you guys? Is there anything you're looking at in the future that you see as a massive opportunity should the regulatory framework allow it?
So I think the big unlock isn't going to be something necessarily new. It's just bringing finance on-chain from the big institutions, putting a lot of capital there. We have a lot of products already which work really, really well. But as Mauricio and others solve the privacy issue, we've got KYC all embedded, and it works with existing regulatory frameworks and financial institutions. Then we'll just see a big movement of capital on-chain. It's already starting to happen with some smaller layer one blockchains, and I think as it progresses, it's going to be quite exciting. So I don't think there's going to be a massive, massive change, just we'll see a change in participants, everything will become more efficient and easier to use, and the use of the blockchain will become abstracted away.
Yeah, and presumably as an insurer, you'll have more confidence in insuring the risks that emerge from these new things.
Yeah, the understanding's improving, and the industry is definitely keen to grow. I think it's easy to dismiss a smaller industry. It's harder to dismiss it when your big clients like Bank of New York are all over it.
Yeah, and Temujin.
Yeah, I mean, for me, I think my answer is not as sexy as privacy, but we've been talking about regulations a lot and DeFi, and I think one thing where the industry has really kind of lagged is being very proactive and taking kind of responsibility for our own future as it relates to compliance. Regulations are coming. Right now, all the tooling that exists out there to allow projects to be quote-unquote compliant, these are all centralized. So if a decentralized protocol even wants to integrate some of this tooling, part of the trade-off is you have to give up a bit of that decentralization, because we spent very, very little time and energy developing compliance tooling for DeFi. We've been doing what we've been accusing the regulators of doing. You know, they're just taking something that pre-exists and trying to slap it onto DeFi. We've kind of done that a little bit as well. So I'm hoping kind of this next phase here, as the industry continues to mature, that we get true tooling that is designed with DeFi in mind first, so that we can do things, very simple things, like, for example, not engage with sanctioned entities without having to give up decentralization along the way.
So it's a DRegTech.
DRegTech.
Okay, one last question, because we've got a minute. Obviously, we're all aware of market cycles, and we're also aware of how regulators respond to ups and downs in the market. Let's say we have another crypto winter coming up. Do we have faith in this day and age that regulators will still remain, forward-thinking and, well, more forward-thinking and more progressive than they have been, should the market be seriously tested and should people suffer serious losses? Do we think it's different this time in terms of regulatory approach?
Yes, I do. I think regulators are often slow to move because they've got to be very cautious. The FCA's primary objective is to keep consumers safe. But because they've already started to turn like a big ship, they'll continue on their trajectory addressing the key issues.
Yeah, that's pretty much a perfect answer. And also slightly more optimistically, as that slow ship continues to turn, I think the scale of the damage might also be limited because a lot of what is being put into place are protections. That being said, from a pure DeFi perspective, the next crypto winter it'll do like it always does. It'll prune the industry. The innovation will slow slightly, but what had been innovated in that most recent cycle will be able to improve incrementally and then can kind of continue along our way.
If that happens, it's cheaper for the regulators to start playing with it. Come on, chain.
Absolutely. What a way to finish. Everyone, please, a massive round of applause for the panel.
Thank you very much.